Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Thursday edition of Benzinga's PreMarket Prep. Spencer Israel here with Joel Elconin and Dennis Dick. On the show today, I think the general theme of the show is that the sentiment seems to be just overriding earnings reports. Good, bad, doesn't matter, because the sentiment that's negative will override all of that. So we'll kind of break that down. That's kind of the theme of the morning, at least so far. We've had earnings from Michaels. We have a bunch of earnings from last night and this morning, and it just doesn't really seem to matter. So we'll talk about that. We'll talk about the Fed, I suppose, a little bit as well. At 8:35, we are going to be joined by Cate Long. She's a Muni bond expert, the founder of Puerto Rico Clearinghouse. And Joel, how are we doing this morning in the market?
Not well, Spencer. We're trading in the red by 19 and a half handles at 2698.75. Your overnight high, 27.26 and a quarter. That's just above a couple closes that you had earlier in the week. Hanging out near Monday's low. Monday's low, 97 and a quarter. Pre-market low, 95 and a quarter. Let's see if that can hold up. If not, folks, we're looking for 86.50 on the downside. That's your 11-day low. Crude, wild couple days there, but down 19 cents after being up, trading at 65.74. Let's just take a look at the daily chart here in crude. You can see you had a nice rally. I believe that was off some API numbers, getting near the highs of the move. Gold continuing on the rally from yesterday, trading up $8 here at 13.29 and a half. We see some resistance at the 13.40 level. Silver up nearly a dime here at 16.52. And Bitcoin, I saw there was some more regulatory problems. Bitcoin is trading at 86.85, brief rally over 9,000. Triple D, congratulations, good call yesterday. You said that no matter what the Fed did, you thought they were going to find a reason to sell, and they sure did. What was behind that thesis?
I mean, it's just sentiment towards the overall market has turned, and it turned really with Facebook. And you can say, what the hell's Facebook got to do with the Fed? Well, nothing. But Facebook made the market turn sour. When you see one of the market leaders fall 10% in a matter of 2 days, it turns a sour note on all money managers. So what that means is as you start to climb back up, you have a lot of people who are willing to take money off the table. A lot of money managers. It's the institutional money that moves the markets. And so we always call that overhead supply on the show. That's what I see in this market. I see a lot of overhead supply here right now. So as you get a rally, we got a little pop on the initial Fed number. There's lots of money managers ready on the sell button, and that's what they are. The selling overpowers the buyers, and we start to tank. So that's why I had the thesis coming in that I thought no matter what, it was going to sell off. And that's exactly what did happen. It did have a little pop, so there's a little bit of heat you had to take. But if you held on, you're pretty happy here this morning because you're now significantly lower than we were when the Fed announced their decision on interest rates just a few trading hours ago, really.
All right. So is it enough for you to go to 50% cash or 60% cash?
No. I don't do any adjustment in my portfolio for this thing. I mean, and that's the one thing. I'm 41 years old. I'm going to say it again. I'm 41 years old. Do I think, let's say I would decide to retire at 60. Do I think in 19 years from now that the market is going to be higher? Absolutely. I think, there's going to be a lot of, things, positive catalysts to come between now and then. So I'm not going to liquidate my portfolio trying to time the market saying that, my investment portfolio trying to time the market and say that, I'm going to be a good market timer. It's very difficult to do that.
Yep.
As a trader, though, that's a completely different story. I have a trading portfolio, I have an investing portfolio. Investing portfolio, I stay long. And I've always been a little bit underweight, underweight the market because I got a sour taste there after the financial crisis, and I've talked about that on the show before too. But I'm still probably 75 to 80% invested. So I'm pretty heavily invested overall in stocks. I'm going to stick with it. Now, that's completely different than my trading portfolio. My trading portfolio, when I have these theses, will usually be short. I was short overnight here, so I'm happy to come in and see the market getting hit here this morning. Now, that being said, we've been hit down, and you made a good note and a good point there too, Joel, just talking about levels. And we've got a significant level that the SPY and the S&Ps tested overnight. We were looking at Monday's low, and we kissed Monday's low and bounced right off it. So if you're looking for an excuse to come here and try to pick the bottom, there's that small excuse for you there.
All right. I just am still licking my wounds here over that 2807 and a quarter print. I mean, you got it up over 20. You got that bet, and now we'll be right back.
You did that to me on a few bets. The Nike bet from years ago, I remember. So sometimes we win these bets, these lunch bets, just by a point, but it counts.
It does. It does. All right. We got a lot of stock specific news here. So we're going to stay real focused this morning, and we're going to cover all of our earnings plays right now, all the big earnings reports. So we'll start with ConAgra, a food stock trading in the green.
Yeah, contrary to what we said yesterday, right? But ConAgra, so 61 cents on their Q3 adjusted EPS, that beat the 56-cent estimate. Sales of $1.995 billion versus a $2 billion estimate, so just under on that. But they are raising their outlook for the fiscal year. The adjusted EPS outlook was raised by 8 cents on the low end of the range. So they're raising their EPS. That's usually good news.
Yeah, raise the UPS. It's good news here too. The bad news is the food stock, and the bad news is overhead supply. And the bad news is I don't see anybody jumping in and buying hand over fist here at any food stock right now. We saw what happened with General Mills yesterday, absolutely destroyed. Kellogg's was down another $3 yesterday. These things have just been annihilated, and there's no reason to just jump in and say this is the absolute bottom of the food stocks. As a value play, they're starting to get interesting, long-term investment portfolio. But as trades, it's a tough gig. And you see a pop here this morning, ConAgra, overhead supply all over the place. So I don't think ConAgra's going to 37. I don't even think it's going to 36. I wouldn't even be surprised, if it doesn't hold on to the gains. Now, it's up 1%. It's a pretty good report. So maybe it can hold on to that. But I'm not coming in here and buying CAG this morning for the simple reason is that food stocks are completely out of favor. And this is a definition of a food stock.
Okay, I'm going to go to the dailies here. I see, a big spike. Your pre-market high is at $35.99. What I want our traders or anybody that's active in this today, just to keep an eye on yesterday's high. Yesterday's high was $35.91, and then you get into the gap areas. Let's just call 36 your resistance on the upside, and small gap fill up to 36.22. So this one held up a little bit better than the others. If in fact we went red here at 35.34 close, look for a test of yesterday's low at 34.80.
Other earnings stocks, they're pretty much all down except for the guests. So here we had about 7 companies reporting here, most of them this morning. And we're going to go into details here in a second, but I just want to give you the rundown here. Carnival trade down. You got Accenture trading down. You got DRI getting destroyed. You got JKS, which is Jinko Solar, trading down. You got MIK Michaels is destroyed. It's one of the biggest losers of the day. And G3 Apparel Group, another retailer, down significantly as well. Five below, it's down. You have the gas holding on, GES. It's actually had a really good report last night. It is trading up. One of the few stocks that are trading up on the report again. It is a very tough tape to be reporting earnings into. And I will say this, people don't believe it, but I will say the macro picture is affecting these moves on these individual stocks on their company reports. Because when you have everything getting red, everything across the board red today, it's hard to find a money manager that's going to come in and buy a stock on an okay report. If it's an excellent report, maybe it happens. But even a decent report, when you got a big red day, tough tape.
Okay, let's go to Dennis's favorite store, Michael's, trading down $1.60.
The scrapbook store where they sell $30 scissors. I absolutely am just the biggest Michael's bear ever, but I'm not short the stock. But long term, I don't get it. But maybe I should. Maybe I should stop that thesis, because if they can actually sell a $30 pair of scissors, they are doing something absolutely right. My story was, and I've only been in these stores a couple times, but for whatever reason, I needed a pair of scissors, and I don't even remember the reason why I needed a pair of scissors now. But there was a Michael's right there. I was like, oh, scrapbook store. They'll have a million pairs of scissors probably for $1. I go in there and I cannot find a pair of scissors for under $20. I was like, are you kidding me? Walmart's going to have a bunch of scissors. So I guess they're all special scrapbook scissors. But I just need a basic pair of scissors. I finally found a pair for like $9.99. You know, they're cheap pair of scissors. And I was vomited a little bit in my mouth, and then I paid it. But anyways, that's my scissors story from Michael's. My wife does shop there, but she always makes sure she gets a 50% coupon off before she goes in there, because everything in there is ridiculously expensive. And the second thing, do people still scrapbook? I mean,
Yes.
this was the scrapbook
Come on.
store, but we got like everything else. It's all posted on social media. Do you even need a scrapbook store anymore?
Yes. David B in the chat. There we go. Michael keeps grandmas happy. That's it.
Grandma. So, okay. So when we lose our next generation, so, 20 years from now when all the grandmas are gone, then Michael's is really in trouble. But anyways, I don't get it. I don't get why the stock hasn't been hit harder. So anyways, give me the numbers here. Maybe I can try to find some.
I'll just say that Michael's is like the messiest store you'll ever go into in your life. But they had a
scrapbook store. What do you expect?
They had $1.89 billion in sales last quarter. So people are going there. Apparently, the Q4 just EPS, $1.19. That was in line.
Sold 10 pairs of scissors.
Well, yeah, $1.19. That was in line with the EPS. Sales, I mentioned $1.89 billion. That was a slight beat on the $1.88 billion estimate. The Q1 EPS guidance coming in light by about 10 cents. 46 cents was the estimate. 36 to 38 cents is the range they gave. The sales guidance for Q1 coming in light as well. The fiscal year EPS guidance coming in higher. The fiscal year sales guidance coming in lower.
What a gift in January when this thing went, beginning of December was $20 or end of November, went up to $28 in January there, or $27.86, and put a double top in, and then just climbed right down the mountain since then. Now we're back where we were at $19. I mean, it was the everything rally. I'm going to call that, and I don't know if I've coined that, but that's what I've been calling it. December and January was the everything rally. And even the garbage rallied, and this one, I believe, is just a garbage stock. And MIK here is proving it here with this report, $19.50. I want no part of this. I mean, yeah, you can say it's support down at 18. Sure, I don't like the fundamental story.
No, not at all here. And my Michael story is, like Lisa will ask me to go there and get a blue marker, and then you go there.
52 blue markers.
I know. You got to bring.
So you're like, well, I don't even know what kind of blue. We have sky blue.
Exactly.
We have, ocean blue. We have blue.
Right. So that's my Michael story.
Maybe it's just, maybe we're just not scrapbookers, Joel.
No.
We should get a scrapbooker on the show, and maybe they'll change our whole tune on this. If you can find a scrapbooker.
All right. So let's look at the action here. We are trading. We have spiked down. We made a low in the pre-market trading. Where is my data window? My data window is gone here. Let's see. Where did it go? Where's my pre-market low?
You're losing your stuff? Anyways, Michael's is trading down $19.50 right now at 8%. Joel now has his data window back.
1919, that is your pre-market low, hanging out at 1950. I see one low on the dailies at 1923. So if you want to hang your hat on that, if not, look out for 1850.
Let's jump over to a couple other retailers. Darden Restaurants, DRI, a place that I do go to. I do like. Which ones do they have? I always forget. Do they still have? They had Red Lobster and Olive Garden, but didn't they sell one of them? Which one did they still, or do they still have them both? Red Lobster and Olive Garden.
They sold Red Lobster.
Did they sell Red Lobster?
Yep.
So they only have Olive Garden and then a couple other restaurants. Who's Darden owned now? We got to find who's Darden got left.
I'll tell you,
because I like the Olive Garden, Red Lobster. I like both those.
They've got Olive Garden. They've got Longhorn Steakhouse. They've got Cheddar's. Never heard of that. They've got the Capitol Grill.
On the Breeze.
A couple ones I've never heard of, honestly.
Eddie's.
I've never heard of any of these, but
Eddie.
Yeah. So Bahama Breeze, Seasons 22, Yard House. I don't know what those are.
I don't know what any of those are either. I like the Olive Garden though, so I'll call it the Olive Garden stock. Down 3.5%. Report wasn't that great. What's the numbers?
Yeah, $1.71 on the Q3 EPS versus $1.64 estimate. Sales 2.13 billion versus 2.14. So they a mixed report there. They beat the EPS, they missed the sales, but they're raising their guidance for the fiscal year. The adjusted EPS outlook was raised by about 5 cents for the fiscal year.
$90. That's your number. That's where it's trying to hold here this morning. Yep. That was the low back on February the 9th, 90.23. So I'm just rounding it to 90. That's the level that it needs to hold. Below there, it gets ugly.
Yeah, exactly. Dennis made a good point there. 90.23 was your low on February 9th. Your pre-market low right there, 89.98. So call it 90. If you slip below there, folks, maybe give a look at 89.30. See what happens there. If not, we could fall as low as 87.60. That was your low on December 15th. If, in fact, we go in the rally mode, you got a long way to go to get to yesterday's low of 93.21. So if you're trying to long off the hop here, I would just, you get it going your way. I just use the half and whole numbers and see where they lift your offers because it doesn't look like this is going to fill the gap today.
Let's jump to last night. Let's get some good news in here. The guess must have blew it away because it's up 11% here in pre-market trading. GES, Spencer, how did they do?
Q4 adjusted EPS 62 cents versus a 54-cent estimate. Sales of 792 versus $755 million. Nice. So good Q4. Q1 EPS guidance coming in lower than the estimate, though. I'm seeing they said the Q1 EPS would be 24 to 27 cent loss. A 20-cent loss was the estimate. But the guidance for the whole year was upbeat. So while the guidance for the Q1 was not great, the fiscal year EPS guidance was just fine.
Stock was obviously in the doldrums. Got a little bit of a lift yesterday. A lot of the retail stocks were strong yesterday. I mean, yesterday's rally was made up of oil and retail stocks. GES closed fairly strong. Getting the pop here. I don't know. I just can't get that excited about this, for a number of reasons. First, I'm not a big fan of, these small retailers there. And I know this is sometimes in strip malls too, but it's in malls as well. Secondly, there's overhead supply here too. $18. I see resistance all over the place. So 17 a quarter. I don't see much more than 75 cents of upside. And we know this market, is turns around a little bit and retail stocks are completely out of favor. You bring up the monthly and the trend is not your friend. $50 stock back in 2011, $35 stock in 2013, $20 stock in 2015, now a $17 stock. Trend is not your friend.
Dennis, do you have on your Calvin Klein jeans or your Guess jeans today?
I used to wear CK. I never had Guess. That was too expensive. I only had CK.
Okay.
And I got the CK at a discount store.
Okay. 1726 trading up $1.74. You had a nice spike here right off the headline number that took you up to 1774. Now you can see sticking out like a sore thumb on your dailies here is your 1760 high. So, call that whole area 1765, 68. That's right in the middle. That's your area of resistance. If in fact we can get through there, we might look at a gap fill up to 80.16. But that was a real bad day. I don't know what happened on that day. Maybe a downgrade or so. Oh, that's when the market melted down, right? In early February. So we'll see. But very important level here at 1765.
I can't feel my Facebook saying that they are doing great online, GES. I can't verify that. I don't know about that, but maybe that's why this retailer has held up better than some of the other ones. So we know online is where you got to be, and it's maybe that's where they're doing better here. Jump over. Let's go five below, FIVE, the $5 dollar store. All these dollar stores actually have held up very well. Even the ones that got hit on the earnings report bounced back. We got the $5 dollar store, though. FIVE reported last night. Spencer, details.
$1.21 versus $1.16. Sales of $504 versus $502 million. So a pretty good numbers there for Q4. Q1 guidance, EPS coming in hot. 31 cents to 34 cents is what they said. 21 cents was the estimate. Sales guidance coming in hot as well. higher than the estimate by about $5 to $10 million. Fiscal year EPS guidance coming in higher. Fiscal year sales guidance coming in line. So pretty much higher all around on the guidance.
65 to 70. That's my levels on this. $70 is absolutely major. Super resistance, Joel. We're not going to see that probably today because it's in the doghouse, but $70 is huge. And then you had multiple bottoms at 65 back in December and January. We did breach that, but we got back over and then it held. So I'm going to say 65 is the level it needs to hold. 70 resistance, 66.5. We're in the middle of nowhere.
I beg to differ on this one.
Okay.
All right. We are piercing a double bottom here at 67. So if in fact we get a little pop, that's going to be your resistance. But Dennis, take a look on your dailies here. And at the end of February and early March, you had several lows at 66. So I'm going to move it up a little bit tighter. I'd say 66 is a level control on the downside. Sure. And then this is kind of like a whole numbered stock, you know, double bottom at 67. I see support at 66. And then, Dennis, I see those levels at 65 that you're talking about. So that's how I would play this one.
We got some support in here.
Yeah, you got support, but it's like every dollar away. So,
yeah,
5 below, though. The stock has been a tremendous run here. Might see some profit takers today. Definitely institutions looking at 70 if, in fact, this goes into rally mode.
Carnival Cruise Line, CCL, also reported. Did they report yet? Did we get the numbers on CCL?
No, not yet.
Sometimes they come late.
Yep, they're late.
Yeah, 8:30 is usually CCL. I always do this to you on the show. I was like, what's the CCL numbers? They're like, we don't have them. So 8:30, we're waiting still on Carnival Cruise Lines. At least I haven't seen them across the tape yet either. Stock is trading down ahead of the report. So we will come back to CCL once they report after 8:30. There's Jinko, there's Accenture. If you guys want to talk those, we can. But there's lots of other stocks to talk about today. I want to talk the fallout, though. First, I want to go to Twitter because Twitter got, annihilated there on that, whatever it was that I've already forgotten again from 2 days ago. Bounced back on the Kramer pump. He really pumped it on Mad Money. It popped yesterday, nicely back. It is getting hit here this morning because you have the head security officer leaving the company or something, Spencer. It's this headline.
It kind of all blends in together with me. I saw
there was a headline that broke. I'm just trying to find it too. I'm just trying to go grab it here. Hang on. There was a headline that broke last night just after 5 o'clock, and it's the head of security or something. Where is it? Twitter security chief Michael Coates is leaving the company. So, and he is their chief information security officer.
Does that matter?
And they started hitting it when that report came out, and it's continued to go down here now. 32.10 is where it's trading. It's down 2%. So it's not super ugly considering where the market is, but it's not pretty either.
Trading down 67 cents, 32.05. The close is important. I mean, as always, I'll talk about your closing price, and your closing price from Twitter was 32.73. The high was right up there at 33.15. So that whole area will be resistance. Coming back on the downside, yesterday's low 32.05, and we're trading right there right now. So you want to see this thing catch a bit off the hop. Your 2-day low is way down at 30.61, and I don't know what to do with this stock. I wanted to sell it right after the report, and I didn't.
You still own it?
Yeah. Yep, I own it. I own it from 17.
It's an ugly candle from a couple days ago, but it's trying to claw its way back. And I mean, this is some bad news, and it's not getting annihilated on this either. I guess what do you think? Like $30 stop out or something?
Yeah, I think that's what I'll do on this one. Long term, I mean, you made the double bottom after the report, 29.68, 29.71. I'm trying to hold on, but like when I see gaps like this, in a stock, I mean, it just like in my mind, I'm like, this is going to come back. I'm going to get a chance to buy this under 28, but it's been strong since the report. I'd rather sell it at, 29 than take it off here and see it keep going higher. But, or maybe I'll just hold on this one forever.
Long-term investment portfolio. David B. pointing out the big winner of the day. It is Omer, O-M-E-R, Omerus Corp. What is the news here? Assuming something with is it a drug stock, isn't it?
Yep, favorable determination in the latest spending package, an extra 2 years of charging Medicare higher prices for its cataract surgery drug.
Cataract
So
surgery
this
drugs.
is
So they're getting some more money here.
Yep, stemming from the congressional spending bill that finally got passed last night.
It is the big winner of the day. It is up 32% here. It is taking out the major resistance of $12. Forget about that. Forget about 13. Forget about 14. Forget about 15. This thing's off to the races here. I don't know how to say this technically now. I mean, it's a big gap up. It's good news on a bad day, but these things can, these drug stocks can be wild.
You got a big spike here, up 376 at 1540. That's the good news. The bad news is we traded up to 1965 and we've backed $4 off that level. And now you got someone just wanting to sell any bid over $16. Your last three bracket highs right around 16, 16 and a quarter, 16.10. I'm looking for some downside in this one. People sitting on profits, and this is really has not been a great performer. Let's look at it. I don't know which ones are these reverse split ones or not. And let's see if this is, because if it is, then I'm automatically would want to sell it. Go to the monthly. No, this isn't not the greatest performing stock, but pre-market high will be the high for the day. And got to get to 16 and a quarter before any upside. Big old gap to fill down to 1196.
Just got a tweet there from House Street Bull in my Twitter account there, and he just sent it to me and talking about Facebook advertisers from Zero Hedge. Facebook advertisers are starting to pull out is the article there, and it's saying Mozilla is pressing pause on their Facebook advertising when Facebook takes stronger action on how it shares customers' data. So it's talking about the data breach here, and there's a fallout here happening at least with one advertiser there. So that's somewhat concerning here. I do see Facebook getting hit here once again. Obviously, overall market is hitting it here, but it's down significantly more in the overall market, and that's not a great headline. So, if you start losing some advertisers there with this data breach, that's more fallout from this. I mean, as long as it's holding the low of the move, which is 161.95, maybe you can try it. But, even taking it closer than that, yesterday's low, 163.30. I mean, you don't want to see it start making new lows.
Nope.
So here you are, your 166 is down another $3. Was this going to be one that's going to bounce back? It probably does eventually, just because it's so loved by the market, but it's right now it's out of favor. So I would, I look at this and I think, and there was somebody on Fast Money arguing last night that it's never traded this cheap on a multiple basis. I think it's only trading 19 times forward earnings. So, from a valuation perspective, it starts to become attractive. But if advertisers start pulling out, then, those multiples will obviously be a little bit more interesting. So Facebook here, a few concerns there where they might lose some advertising, and that's obviously their major source of revenue.
Traded down 349, 165.30. Basis the daily charge. Dennis gave you some good daily levels there. Yesterday's low in Facebook, way down at 163.30. Your 2-day low, 161.95. And I don't know, so maybe split in between on that. Very important to hold that low, though, that you made on Tuesday, 161.95. That coincides perfectly with that 61.66 low. Man, I guess with these stocks, when they get to like a level like that where you're spiked down and had a major rally, you can't be too picky. You can't hang. If you want 166, I was looking for 160, 166, maybe lower 161 handle. You can't be too picky. I guess it depends on like how much profit you have in the trade. Like if you're short from 170, I mean, what are you going to do? Are you going to, pick pennies over something like that? It's hard to do, but for this one, I don't know anything. Now I think you got to make that whole area a buy zone from 161.95 to 163.30.
And balances here, not surprising, there's quite a few sell. Baba, the Chinese stocks have been murdered. And if you want to look at the source of the sell-off, really the Hang Seng started getting hit last night, and that's really started and then spilled over into Europe, and now it's spilled over into our market. So I'm blaming the overseas markets for the majority of the sell-off here today. But if you look at, some of the Chinese stocks that obviously trade over here, Alibaba's down 2%, Baidu is trading down 1.2%. You got JD.com trading down 1.5%. Momo, which has been a monster, is giving back $1.11 this morning, so it's down 2.7%. Still have Momo in my investment portfolio there. It's been a really good one. But the Chinese stocks are weak here this morning.
Right. And I think that kind of took us down overnight, and then the continued momentum when Europe opened. Dennis, you also mentioned some weakness in the European banks, and that has kind of been going on.
Continued weakness, yeah.
Yep.
Europe has, and if we look here, we can look at the big ones. We know Deutsche Bank got killed yesterday. What's getting killed again here this morning? It's down another 3%. I mean, DB is in a free fall here right now. So it's ugly. Barclays, which you talked about, which had the upgrade there and the nice pop, has now given it all back. It's now trading at $11.85, down another 2% here this morning. ING is another big one. It's down 2.6%. Banco Santander is down 1.5%. RBS, Royal Bank of Scotland's trading down about 2%. So across the board, these things are weak here this morning.
We just had jobless claims. I don't know if you guys want me to read those. We had 229,000 versus 225,000 estimate. So a little more than expected on the weekly jobless claims. We're the same thing. We're just chopping around in a tight little range here since we started the show. We're drifting up a little bit here right now, but kind of muted at response to this number.
Do you think that, it's almost, not I want to say 100% probability, how many times on these down opens or even flat opens, there's always some kind of opening pop, right? Because you got to bring the cash in, right? So they're going to be selling some stocks and buying the futures. Doesn't that kind of provide some, do you think we're just going to open up, go straight down through 95 and a quarter?
Well, it depends on how the opening prints go too, because a lot of times the ARBs can obviously work the opening print as well. So you got to see how big the opening prints are, if the ARBs can come in. But, the arbitrage is going on all the time. It's going on in the pre-market as well. It's not like, they don't trade. Years ago when the pre-market didn't have the kind of action, I'd say you had an argument there. But, we've got tight markets. Look at the Bank of America market, BAC. It's a 2-cent spread right now, trading like crazy. It's already traded volume of 289,000 shares. So any arbitrage between that and, the XLF, if you want to look, or even the SPY, is already happening. So I think that ARB goes on continuously as long as the stocks are open. I trade the ARB too. I talk about that. So, between 4 a.m. to 7 is tough because there's not much in there. But as the books thicken up pre-market, you start to see the ARB get more active here. And that's, I think, what you're seeing here right now as well.
Denny, I'm going to put you on a spot here. ConAgra, trading up 64 cents, 35.98, right at yesterday's high here. Nice gap to fill here. Are you going to push this thing through 36?
No, I don't want to. And we talked about it already. I want no part of a long on a food stock right now. Maybe long-term investment portfolio is a different story, but this ConAgra has actually held up a lot better than the other one. So I guess if you're trying to find the relative strength, you've identified the correct one. But the sector is so out of favor. I can't just jump in here to ConAgra, even though the report's okay. I think you got overhead supply all over the place, and I'm not jumping in, 36, open 50 cents. I think your risk return isn't there.
And Spencer's thinking of adding KHC to his portfolio. Kraft Heinz, he was doing some research on it.
Yeah, you got me curious yesterday, Dennis.
You know what? I have it on my radar. Yeah. It needs to have a green candle though before I'm jumping in. I'm not coming in here just trying to call it. The thing's down for 6 straight days.
Yeah.
Really, since February, this has been annihilated. It is getting to a point of cheap. Is this maybe Warren's liquidating? Maybe he's getting out of his Kraft Heinz. But I'll tell you, something is going on because this thing goes down every single day. And obviously yesterday the catalyst was General Mills. But this has just been annihilated here. It gets interesting eventually though. KHC, looking at it here at a valuation level, it's starting to look attractive.
Yeah, I'm with you. But usually when something goes on my radar, it takes me like a week or two at minimum to pull the trigger. So I'll be watching it for the next week pretty much.
I'm watching it too, but it's noted. I'll just say I'm noting the action, but at the same time, I can't pull the trigger on it for whatever reason. I just can't do it.
For sure. All right, 8:35 now. We're going to take a quick break and grab Cate Long, a Muni bonds expert and the founder of Puerto Rico Clearinghouse. We'll be right back in a moment.
To Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elconin, along with Dennis Dick, Spencer Israel working the boards, and we are joined by Cate Long of the Puerto Rico Clearinghouse. Cate, how you doing today?
I'm great, Jill. How are you? Good morning.
Good. Well, we're having a better morning than the market here. S&P futures are making new lows on the session here, trading down nearly 25 handles, but we haven't talked to you in a while, and I know you've been working on some new projects. Could you fill us in?
Sure. I mean, my main effort is Puerto Rico because it's very complex and ongoing, but on stealth, sort of underneath, I've been working on a data transparency project for the municipal bond market with a longtime market vet, and we're starting to talk to some platforms and exchanges about helping them visualize market data for investors. We'll have more in the future about that. It's very exciting.
It's all about the data, huh? That's what people want. Data to make trades. Okay, let's move on next year. I mean, let's talk about what's going on in Puerto Rico. We've you had the hurricanes, and everything I hear coming out of there is just not good. Lack of water, lack of food. Things really haven't improved that much. I don't know what the United States is doing, but let's talk about it in the context of what's going on now. And you also made an interesting comment about comparisons to Detroit and that situation. So let's start there.
Right. So the sort of mainstream media portrayal of life in Puerto Rico is quite a bit different. They're getting power back to almost 90+% of the people there. I think almost 100% of people have water, except in very extreme situations. All the schools are operating. They've lost about 4% of jobs when you compare to prior to the hurricane. Tax revenues are coming in basically around 7 or 8% below what the projections were from before the hurricane. So the economy is moving along there. There was a ton of destruction. The Army Corps of Engineers in there cleaning up the debris, kind of moving things along. The key problem for Puerto Rico was and continues to be the power system, which has really just been for decades a mess. was in bankruptcy and restructuring prior to the hurricane, and now it's even more complex because the federal government's in there, Department of Energy, Army Corps, Congress is back in there trying to oversee what's happening. So things are moving along. Puerto Rico still needs a lot of help.
Let me talk about.
They're getting a lot of help.
Let me interrupt you for 1 second. Isn't Elon Musk supposed to come over there and take care of the energy problem?
I think that his firm does have some microgrid, a couple of microgrid installations in there, but that probably covers less than 5,000 people, and there's 1.4 million households that need power. So that's a really tiny effort. I mean, it's good that he's there, but it's really just a blip in sort of the overall picture.
Okay, and then you mentioned the person you were talking to. I don't know if it was a Detroit area person, but you were making some comparisons to the Detroit bankruptcy, which you really kept us informed on.
Right. So that was Martina Guzman at WDHT yesterday. She asked me, she really trying to understand how Detroit and Puerto Rico are similar in terms of the bankruptcies. And as I explained to her, they're not similar in a lot of ways because Congress created a special law to handle the Puerto Rican bankruptcy called PROMESA. It incorporates some of the bankruptcy code, but it also imposed an oversight board, of 7 people appointed by President Obama at the time to oversee the restructuring, basically, of the Puerto Rican government and certain elements of the economy. The debt restructuring and the pension restructuring and stuff does happen in a federal court setting, which is similar to Detroit's bankruptcy, but also the scale is much bigger. Detroit, basically had 15 to 18 billion of liabilities, depending on how you do the pensions. And Puerto Rico's got like 120 billion. So there's just a lot more complexity to what's happening.
So how did you fare if you, had any of this Puerto Rican debt or any investments related to the Puerto Rico? Are these debt holders getting wiped out?
So it just depends on where you came into the situation, right? So there's 500,000 bondholders in Puerto Rico, or the last count that the government gave out. And a lot of those folks are just individual retirees and households that bought the debt at par, which is 100. And so they're sitting on pretty substantial losses. Plus, they've not received any principal or interest payments since the bankruptcy, basically since 2015 for a lot of this debt. And then you got a group of guys that came in, distressed hedge fund guys that came in and bought the debt at very distressed prices. And depending on where they came in, some of them have gains. Some of them are sitting on losses. But the debt really bottomed out in December. A lot of guys had to sell just to clean their books off. And we've seen really strong rebounds in debt prices since December. Some of this debt is up, 40 to 50%. I mean, that's from a low base, but really huge gains. Probably over the next 6 to 12 months, it'll continue to creep up incrementally, but we won't see that big pop like you saw the last couple of months.
So what about right here, right now? I mean, are you advising your clients to stay away or dip your toe in the water for some nice yield here on some of the Puerto Rican debt?
So distressed debt investing is some of the most complex investing that there is, because there's not a lot of transparency into the underlying fundamentals. There's not any recent financial reporting, so it's very limited the analysis that you can do. So I wouldn't advise anyone that's not, very sophisticated investor to, dip their toe in. There are still mutual funds, including Oppenheimer, that own Puerto Rican debt, which, I think retail people that don't want to spend much time could look at and just sort of rely on, the expertise of the mutual funds that own the debt to, make that ride up and stuff. But in terms of investing in individual bonds, it's really not a place for people that don't have experience in this space.
Okay, let's just talk about the U.S. municipal bond market, rising interest rates, Fed, You laugh at everything I say. You're kind of you're moving up my list of people that laugh at all my jokes.
Yeah.
What about effective interest rates rising here and the U.S. muni bond market?
Right. So people that own bonds now, they're going to take losses on mark to market in terms how their bonds are valued on their books. If your hold to in maturity investor, it doesn't matter because you're going to still get your principal paid back. For new people that are looking at the municipal space, it's a good time to start looking because as rates rise, you get better returns. And there's some, there increasingly will be more attractive opportunities to come in and buy municipal bonds, either on the tax exempt side or on the taxable side. So it is. And I've said to you for years that I didn't think it was worthwhile to look at, but I'm totally, doing a 180 now and telling people to, heads up here, start taking a look, start getting familiar with some of the credits. Illinois, Illinois is the big question. It's a place I think people can play a little bit more readily than they could in Puerto Rico just because it's transparent and people understand it. You do have to pay attention to the politics and what's happening in the state legislature and now the governor's race. But there's some pretty substantial yields in Illinois bonds.
Any other states that, you had Detroit wasn't the whole state, it was a city. You had Illinois. Are there any other states that are on your radar as far as, potential danger or problems with their debt covering their expenses?
Yeah, so the stinky boys kind of for the municipal market are obviously Illinois, Kentucky, because they have a lot of pension debt, which they're having trouble deal with. New Jersey, just also a ton of pension debt they haven't dealt with. And Connecticut. Those are kind of the big ones that people try and watch closely. Yields haven't blown out in a lot of those places like they did in Illinois, but they do, those 4 states basically are the ones with the most stress right now.
And just overall, with the Fed, the change at the top, the interest rates going up, some fear that they're not doing enough to keep up the pace of inflation. Give us your interpretation of that.
I don't know. I mean, I'm all for higher yields kind of. I mean, we've been in this QE, the suppressed rate environment for years. And all of this seems artificially low to me, just in terms of risk, what these yields represent in terms of risk. So I'm fine. I mean, I think the economy, is on a path of growth, increasingly strong growth, and the Fed can raise rates, try and keep control of that if they want.
We've been on with Cate Long of the Puerto Rico Clearinghouse, giving us a look at the municipal bond market. Cate, always a pleasure to have you on. We'll talk to you again soon.
That's great, Joe. Take care.
All right. S&P futures are just getting annihilated here. Dennis, is that you out there?
Are we taking out those lows, Joel? Are we taking out those lows?
Yeah.
Monday's low was 268.62. We are now significantly below that, 267.88. So now you start thinking, now I honestly start thinking what the 264.82 called 265 from March the 2nd. Yeah. That's the level that needs to hold down. That's still $2.50 away from here. I know you got a couple other little levels in there too, but the big level is now 265 on the S&P. So this is ugly. It's ugly this morning.
Just as I said, we always get a pop off the open, right? Well, they're ticking it down 20 handles before we get pop. We just made a low. Ugly. We just matched our 11-day low here at 86.50. So maybe get a little bit of a bounce here. Gold still in the green by $10 at $1331.60. Silver hanging in there. Oil starting to creep lower here, giving back a lot. Some of its gains from yesterday, trading down 55 cents at 64.62. Was there any data? Did we have any news? Because that was we had the jobless claims number, but that was almost 20 minutes ago. So if we see any news or anything related to this extended selling here,
news is people want out of stocks right now.
All right.
It's continued, it's continuing to go down. The imbalances aren't that large. It's funny, you look at this and you think, whoa, but, it is early here. It's 40 minutes, so they're going to fill up these books. But right now, they're all relatively small still. So it's going to get uglier, though, from an imbalance standpoint because the S&Ps are down so much here. So you have the Arabs come in. They're going to obviously be selling stocks against the futures and against the SPY. I had a few other stocks here on my list here. We never touched ratings yet. There is a few interesting ones here this morning. Ralph Lauren catching an upgrade at Cowen. It is one of the few stocks that is trading in the green here this morning. You've also got General Mills getting upgrade to hold at SocGen. They obviously got killed yesterday. You got LUV getting upgraded at Buckingham. Full disclosure, I am long LUV as a day trade. And Masco getting upgraded at Deutsche Bank. So those are the 4 that I had written down. Is there any other big ones that I missed there, Mr. Spencer?
Lear, LEA, upgraded Morgan Stanley by Adam Jonas. JP Morgan upgraded Artrock. What else? Nope. Pandora, did you mention that one?
No, I forgot about the Pandora one. Who's upgrading them?
Raymond James to strong buy. Market performed.
Whoa.
Performed.
Well, let's talk Pandora.
All right.
There's one to talk about because that thing's trading up almost 6% here this morning. It's a big pop for Mr. P.
Strong buy.
Strong buy for Mr. P. What do you think, Joel? You coming in there buying with 2 hands?
How many times have I heard this? How many times have I heard Pandora is getting bought out? How many times have people upgraded? How many times have I heard that some fund is or some big brokerage firm is putting a lot of money into this? Sold to you. I'm not buying this thing. I wouldn't buy it with your money here, Dennis. Pre-market high is 5.25. Some decent volume trading. Look on your daily charts. And let's see. We got a double top at 547, but it won't get there because it probably won't even make a new high from the pre-market.
I think there's a lot of resistance at 325. I'm sorry, 525. Get my handleitis here like you have. Lots of overhead supply here it's coming into. So agree with you. I'm not buying it here either. Spinner pointing out that the TLT is up $1, and I have been looking at that all morning, and I can tell you the banks are taking on the chin because of that as well. Bank of America is now down 1.5%. Citigroup is down 1.5%. JP Morgan down 1.4%. Goldman Sachs is down 1.2%. And our friend Morgan Stanley down 1.7%, leading the way. Banks ugly here this morning. TLT not helping their cause.
And they were weak yesterday ahead of the report. Even as the market was rallying, I was noticed that some of these banks were having a hard time going green. Stargazer in the chat is asking about ABBV, and Dennis is traded down 7 sticks. This is one you own, isn't it? Did you get this as a spinoff or something?
Yeah, I got it from Abbott. So I've owned this ever since it came public. I've had it. I had Abbott Labs. It gave me AbbVie, and so I bought Abbott Labs back in like 2010 or 2011 for $48. And then they spun me off AbbVie for 300 shares, and I still have my Abbott. So I'm actually up 12 points on the Abbott, and I'm up the whole 105 points here on the AbbVie. So you can say it's been a very good investment for me. It's an ugly chart here this morning. Just giving you the news. There obviously is going to be some news here that's driving it down this morning. And AbbVie cites the news won't seek accelerated. Yeah. Okay, you have it, Spencer?
I was going to say that the news is they're not going to seek accelerated approval for one of their drugs.
Yeah, so reports phase 2 a study and obviously not great. I mean, the drugs have been in tough. It seems like all the time. This is one that's been held up a lot better than the other ones, but it just seems like they're prone to bad news lately. And Celgene had multiple drugs that hit them down. AbbVie, my portfolio has taken it on the chin because I do have a lot of drug stocks in there, and drugs have been completely out of favor. Now, this is, a portfolio with a 15 or 20-year time horizon. I still believe aging population. I still believe in the demographics. I still believe that drugs are not going away. And that's why I'm overweight drugs, and I continue to remain overweight drugs. And I think, if you're buying drugs here right now, I don't think you can go wrong 20 years from now. You can go wrong 20 minutes from now, though, because they are out of favor. So keep that in mind. It's all about time frame. AbbVie, probably not a bad investment, but right now out of favor, too.
All right. Your pre-market low, you just made a low at 104.50, trying to recover, but only trading at 105.14. Boy, you don't have much to hang your hat on here. If you take out that 104.50, look for 101. That was your low on February 6th. Another low at 100 on the 16th. So for me, if I had a short, the 100 to 101 area would be a decent place to cover. Big fall here, so maybe some people that have taken this home short want to take a quick profit on it. But pre-market low so far, 104.50. Immediately, bad reaction to that news.
I mean, this is a FANG sell-off here too. Obviously, Facebook we've already talked about. It's down almost $5 here, so you're starting to get close to yesterday's low, which was down at 163.30, only a buck off that now. But if you want to look at the rest of the components, Amazon is down 17 bucks here this morning. Netflix is down another 4 bucks, and then you have Google trading down 12 points here this morning as well. So it's an ugly day for FANG. And then you had the Fang Man you were giving?
Fang Man.
Microsoft.
Fang Man is Microsoft in there, and it's down 1.2%. We'll throw Apple in there, and it's trading down just about the market. Actually, it's holding up a little bit better than the market. It's only down 0.81%. And then who's the N?
NVIDIA.
And NVIDIA, actually, I looked earlier, was holding up not bad. Yeah, it's, you know what? You talk about NVIDIA, it's been holding up very well. I mean, you think about where some of these other stocks are, NVIDIA is still kind of just a magnet level. It's been 250 bucks. Can't seem to get away from that level. This looks like consolidation eventually go higher here. So if you eventually the market turns around, and I'm I'm not saying the market's going to turn around, but if it does, I think it's going to be a stock like NVIDIA and Micron that lead the way. Full disclosure, I am long Micron, which is holding up well today too. NVIDIA, I am not long, but I like the chart here, and I like that it's not selling off with the overall market, so it's got good relative strength.
Wow, you're long Micron. Earnings after the close, right?
Yeah, I'm going. And like I said, it was only a third position that I put on. So my normal position, is whatever. I only put a third of that on in my invest portfolio. So basically, I'm looking, it depends on what the report says as well. But put a third on because I like that. I like the valuation here. I think it's attractive. Somebody likes it because it keeps getting bought up, and it won't go down with the overall market here too. So there's lots of reasons to like Micron here. Again, what earnings are a wild card. We are reporting on a tough tape. If it doesn't turn around, this could be the kind of tape that they sell any stock off on. But I think Micron beats tonight.
And to clarify, Dennis only has 10,000 shares of Micron on because he's got instead of the normal 30,000.
There you go.
Let's see here. S&P's hit 86.50. And as I look down at my sheet that I diligently do every night, that was a 3-star. That was your 11-day low here. So we'll keep an eye on that here as we approach the open here in about 30 minutes. Another stock due to report after the close, Nike. Tremendous run. Was that a new all-time high? Did Nike make a new all-time high there? It sure did. Yeah.
Did it?
Yeah.
Wow.
Former all-time high was 68.
End of February.
Yeah. 68.20. And you got up to 70 and a quarter, a nice whole number here. 60 to 70 or 50 to 60 had been the range for a long time.
Yeah.
Maybe 60 to 70 is going to be the new range here in Nike, trading down with the market here in the pre-market. Let's see if we can give you a level. Trading at 65.5. 3-day low is 65.19. For Cleed, I'll do a quick technical on Micron. I mean, this one's tough. It's only trading down 49 cents. Real tight range from yesterday. Yesterday's low 60.60. So if in fact this is going to truly rally here, you're going to get a bid off to 60.60 and maybe get up and test the close. And that's another thing too, folks. When you're trading, some of these stocks and you're trading, you're being a contrarian, you're buying them. Believe it or not, man, they'll get back up to that closing price or pretty close to it. Like I wouldn't hang out for 61.07. Maybe I would look for 61 even or something like that. But the closing price, long or short, that's always a good level to keep an eye on. All right, Dennis, we got, what do we got? A minute left here. You want to give us any changes in imbalances or any closing thoughts?
I just want to say, on a day like this, if you are looking to buy stocks, and a lot of people do look, if the market turns around, I always look to the previous day. What was strong the previous day? Those are the stocks that, if you can get them on the cheap, can sometimes bounce back the quickest. What was the strongest sector yesterday? The oil stocks were monsters. Now, oil is down here this morning, so they are going to be pulling back. But I think there's some underneath demand here now in the oil stocks. Check out a stock like ExxonMobil. ExxonMobil put in a hard base there at $74. Had a nice run yesterday. Got up to $75.64, closed fairly strong at $75.04. It's pulling back here this morning. That's one that, I'm looking at, I don't have it in my long-term invest portfolio, but I'm looking at it for a day trade here as well. So on the pullback, I like the oil stocks here. If you see some of these, and some of them had really incredible runs. I mean, again, in the smaller ones like Whiting Petroleum, WLL, was up $2 yesterday. Like you had some of these oil stocks that were up 7, 8, 10% yesterday. So on a pullback here this morning, those are the ones that I think are going to bounce back the fastest if we go to turn around the market. So if I'm looking to buy something this morning, it's going to be the oil stocks.
And Urias wants me to tell you that Connor McDavid may need a job pretty soon, so maybe you can help him trade.
No.
That was
Connor
a low
McDavid.
blow.
That
Oh
was
my
a low blow. McDavid could win the Art Ross on one of the worst teams in the league. So he can win the scoring title on one of the worst teams in the league, playing with a bunch of boat anchors like Milan Lucic. And I mean, McDavid is awesome. The Oilers, not so awesome. It was a tough year to be an Oilers fan, not a tough year to be a McDavid fan.
All right.
All right. That's a good comeback, Dennis.
We're going to say goodbye to Dennis.
Bye, Dennis.
And we're going to, but Joel and I are going to stay on. Same thing we did yesterday. We're going to do a little bit of a ticker time right now. Before I do that, I didn't want to forget to mention that, or maybe Dennis should have stayed on for this part, but today is the beginning of the Toys R Us We're Going Bankrupt sale. So if you want to buy toys, you can go to Toys R Us starting today and buy a bunch of toys.
Is there any around here?
I don't know, but I just wanted to make that announcement for anyone in the toy market. Joel, so why don't you grab the screen and we're going to do some tickers. Joel's going to do some technicals for you. If you have questions, throw them in the chat, premarket.benzinga.com or youtube.com/BenzingaTV, and we'll kind of be here for the next 10 or 15 minutes. So, Joel, why don't we just where are we going to start off?
Let me see here. I got to access this full screen here. I went and someone was asking about a couple drug stocks here that he thought were looking strong. Let me go up and look in the Ed Parker. Two interesting long drug stocks. So we'll start out with those. One is INFI. We'll take a look at that issue. This is a low price one. It's only trading down 4 cents. So let's take a look at that. I mean, always, the most you can lose with this is $2.50 as you buy it here. Just good support. I'm not real great with these low price stocks, but you do just have a series of lows from 230 to 250. I think in order to really get a breakout here, I'd keep an eye on the resistance, double top at 283. The other stock that Ed Parker had on his radar, I need to move up the chat, was
SCO? No.
There was another one. I'll take a look at SCO for him too. Getting a bounce here. Made a new low of the move yesterday. Boy, this is not a great looking chart, Ed. What are you doing to me? 1967 was the low from yesterday. 1975 was your close. Trading up 39 cents in the pre-market. So if, in fact, you could clear yesterday's high, 2059, you might have some room for upside. That's still quite a ways away. What is significant about that low from yesterday is it just took out the former low of the moves at the $20 area. So we'll see if you come back down. And
GERN was the other one.
Oh, GERN. Thank you, Spencer. GERN. Wow. Someone was it Ed? Were you asking me about this one yesterday? And I said, maybe if it closed green, it would be a good idea. I mean, this stock, just over $2 here. 213 was your low on February 23rd. 499 closing right at the high and getting some follow through. Pre-market high in this is 577. So I don't know if there's continued news here, but you have backed off here. Let's go to the pre-market chart. Let folks know what we're looking at. 24-hour market. Come on. GERN. regular session. Anyways, your pre-market high is 577, so that would be a nice target. SPOs are falling back down here to the lows of the session. Actually, just made a new low at 84.50. Bounced off that level again up at 88. So continued weakness going into the opening bell. TT Mac is asking about a stock that the Reverend is talked about for a while, and this is not one that has performed well at all. Made a new low of the move a couple days ago, trading flat at 10.16. That was right near the high for this. No, not really. You just got 10.42 is your high from yesterday. 10.75 is your 2-day high. So I don't think anything until you get it back, maybe a couple closes over 11. But this stock is certainly not doing well. GSVC, that's a stock that Kolb talks about. They own 8% of DBX. So let's see how DBX is acting today.
DBX is IPOing tomorrow.
Oh, okay.
So that's Dropbox.
Okay. Oh, that's right. That's okay. That could be a good windfall for them. GSVC holding company. And you know what? Someone else has thought that this is going to be a windfall for them because the stock has moved up from $7 to over $9. So pretty high expectations of what their percentage holdings, or if they're going to cash out, how they're going to do on this. If it continues to rally today, though, folks, you got to keep an eye on the double top at 938 and 939. So be a little bit careful with this one, as it seems someone's been anticipating the good news or whatever they're going to reap from this stage.
GSVC also has a 15% stake in Spotify, which is going to IPO in like 2 weeks.
Okay. All right. Thanks. Good information here. Jar, he's going back. He recommended AMRS 9 months ago at $2, still underinvested. ARMS or ARRS is a symbol on this. No idea what it is, but that was a good buy there. Popped up over the last 3 days, traded down a penny. Finding resistance though here, Jar. You got a double top at 704, 7 even, and then 717. That's a big level to clear. And also you have a gap to fill after that to 782. Good support if you're comfortable buying on double bottoms in this market. Your 3 and 4 day low are 622 and 623. George Gotch in the Google chat is asking about MZOR. That's Mazer Robotics, and that's had a bad couple days. Tried to recover yesterday, trading down $1.25 at 62.01. That exceeds right there yesterday's low, George. So if you like this one and it holds 62, looks like you got a shot on this one. Of course, the close of 63.20, 63.26 could be a potential target. If in fact this 62 goes by the wayside, the other two daily levels that come into play are 61.14, and then you also like a whole number of 60, but your February 20th low is 59.63. And George, you said it was downgraded at the highs. Whatever analyst did that, you should take note. Billy H, we're going back over to the Benzinga chat. He's asking about CVA, and that's Covanta Holding Corporation. Flat in the pre-market. This thing likes to move for only a $15 stock. I really can't tell you support. I'll use yesterday's low as support, $14.95. There is a bunch of lows under 15. So there's definitely some accumulation under 15 going on by, one large player or several large players, because you have 1, 2, 3, 4, 5 lows from 14.70 to 14.95. So we'll see if the buyers step up their price maybe to 15 even what I would like to see for this stock really to have some potential, nice rip roaring rally, I like to see it clear 1560. You had 3 highs between 1545 and 1560, March 12th through March 14th. So if it gets through there, maybe you got some room up to $16. 6% dividend on CVA. That's nice. I mean, that's one of the reasons that I bought Western Digital a long time ago, is because I figured, it had a nice yield. So in this yield, still low yield environment, some dividend stocks can be attractive. Of course, you always want to worry about continued rate hikes. SPOOs really can't get away from that low of the session, down 33 handles, 84.50 is your current low. Angie Baby, she's on the defense today and in a down market. And on Angie Baby's radar, we have a couple oil stocks. First, let's take a look at CVX. And boy, that's got down $1.01 here. Really easy to find the major resistance here, Angie, and that's at 118.30 level. A couple highs in that area. Coming down 115.43. So Angie, you may get a look at yesterday's low at 114.80. So really relative strength, pretty good here in Chevron, 114.80 yesterday's low. The other oil stock, what's Angie looking at here? PSX, that has been, that one showed some life yesterday. That's flat on the session, so that's showing some real good strength. 96.15. I'm hard to see where it's bid or offered in the pre-market right now, but Dennis, like he said, if he, stocks that were strong yesterday because of the oil rally, those are some that he might be looking at as well today. Stargazer's asking me about Western Digital, and man, oh man, every time I look at it, I wish you guys wouldn't ask me about it. I want to sell it. Trading down $1.34 in the pre-market, 101.50. Let's see if you got any daily levels here. Yeah, you do have 2 lows right at the 101.50 area. So opening up into a little bit of support. The problem is if that support does not hold, you're looking at a drop here, and that drop could take you all the way to your March 12th low at 99.76. Angie Baby, that's right. Mr. Buffett has put a lot of dollars there in PSX over the years, and that will be one of his underperformers, but could certainly perform well today. Spencer, did I miss any stocks here?
You missed Ford.
Ford. Okay. What did Brent? What did someone call that stock yesterday? Ford.
It was Adam Jonas, right?
Adam Jonas. What did he call it yesterday?
Morgan Stanley.
A cheap engineering stock?
A cheap machinery stock.
Cheap machinery stock. I think that's pretty complimentary for it. Ford only trading down 8 cents here at 11.02. You got that one upgrade, and that was trading up 50 cents. Could not hold that the gains from that upgrade. Gave it all back, and then you got a nice gap fill here. So I don't mind this thing under $11. Yesterday's low, 10.93, still showing some relative strength. Trading just above that. And then the low after the upgrade was 10.87, and that was a nice gap fill here. So are you going to get rich buying Ford here at $11? No. Are you going to get some decent yield and, a little bit of dividend protection? Yeah. So Ford, definitely $11, good support. And then looking at Ford, you got to look at GM. This thing was on my radar at 40, and now it here is under 38. That has a double bottom at 36.54 and 36.59. So 36.50 is your major support here in General Motors. All right. This has been a jam-packed session here. We've covered, 40, 50 stocks here, Spencer, but you want to wrap things up and preview the final show of the week.
Tomorrow's show we are joined by Greg Furman, new guest. He works for a firm. He's out in Toronto, works for a firm called E-Trade FX. And he'll be on the show tomorrow to discuss his approach to trading, his approach to the markets. That'll be tomorrow at 8:35. If you want to catch any part of our shows again, you can do so on our podcast on iTunes, SoundCloud, and Stitcher, or just watch the show again, youtube.com/Benzinga TV. Thanks to all you who joined us in our chats today, premarket.benzinga.com, and on YouTube. Thanks to Cate Long, who joined us for a few minutes. We appreciate that. Hope you all have a good rest of your morning. Did you have something to say, Joel, or no?
Nope.
Okay, cool. Hope you all have a good rest of your morning. Hope you all stay safe out there. We'll be back with you folks on Friday.